Hey, my name's John Stevenson, and I am the Guaranteed Retirement Guy focused on annuities for you and giving you full transparency. So, a question that I get is, what annuity gives me cash value? So, in other words, where can I get the most liquidity in an annuity? I mean, I know my money's tied up, but is it like life insurance where you get cash value? Well, kind of. I mean, it definitely is sold by life insurance companies, and you've got term life insurance, which of course there's no cash value, and then you've got permanent life insurance, which consists of whole life and universal life, and they all have cash value components. Now with annuities, as long as it's not a SPIA or a DIA, then yes, you do have cash value. In fact, a lot of times you can pull from that cash value even while it's earning. So that is good to keep in mind, because when you're thinking about annuitizing your money, you give up 100% control of it. So let's say you put your money into a single premium immediate annuity, you put all your money into it, you're giving all of that money to the insurance company to do whatever they want with it. And of course, you're getting a payout for the rest of your life, but you have no control whatsoever with what they do with that money. You have no control over that asset. You cannot get it back. And so there is no cash value whatsoever. Now, with a fixed index annuity or a fixed annuity or even a variable annuity, they all have cash value components. Variable annuities, of course, you're subject to the market fluctuations, and you can lose money in those. If the market takes a dive, your money goes down with it. Now, with fixed annuities, or in other words, MYGA, multi-year guaranteed annuities, you put a lump sum in there, very similar to a CD. And so, yes, of course, you've got cash value in there. And they usually will allow some sort of withdrawal privilege, what we call a free withdrawal provision. And you usually can access between 5 and 10% on the free withdrawal. Some of them don't allow access. Very few of them don't allow for that. Most of them will allow for something. And then some of them will only allow for interest only. And so, yes, it has cash value, but the liquidity, of course, is limited. Now, with a fixed index annuity, most of them that I see will usually have a free withdrawal amount each year of 10%. Some of them are 5%, so it just depends on the carrier. And, you're limited as far as what you can take out. Your cash is growing, and every single year, if you earn 10% in earnings for 1 year, and let's say you've got $1 million in there, your account is going to be worth $1.1 million. Now, let's say the next year, the market goes down. Okay, the market goes down, and of course you're shielded because you're in a fixed annuity or a fixed index annuity that does not give you that market exposure. So the nice thing is your 1.1 million stays where it is. Now let's say you want to take a withdrawal. Well, if it has the 10% free withdrawal provision, then you can take $110,000 out. You won't have any surrender charges, no MVA charges, no nothing. Okay, so that's good to know, because as it earns, you're thinking, hey, I'd like to take a little bit of money out for vacations, or maybe I want to buy a car, but I still want to get as much growth as I can and still have that market protection, then you can do that through a fixed index annuity. And then, of course, at some future period, if you wanted to activate income, guaranteed income for the rest of your life, you could choose to annuitize it and give up full control of your cash value, but I wouldn't recommend that. I would recommend, if you're going to do that, just make sure you add an income rider that gives you that guaranteed income withdrawal for the rest of your life, whether it's single or joint, and then you can continue to have full control over the cash value in that annuity. So yes, short answer is yes, there is cash value in your annuity. There are some annuities that will actually allow you loan against them. Most do not, but there are a few that will actually allow you to take a loan against that annuity. So you just have to ask yourself, is the cost for that loan going to be enough? Will it be too much, depending on what the earnings would be? So if it's earning a lot and it covers the cost of the loan, then great. If it's not, just be prepared for maybe a little bit of a net decrease in that value. Because if you're being charged 7% interest on the loan and you're only making 6.5% interest that year from the index, then there you go. It's a minus half a point. If that answered your question, let me know. Let me know in the comments below. Also, if you want to book a call, if you have questions about annuities for yourself, for your loved ones, maybe for legacy or for guaranteed income, book a call. I'm pretty easy to talk to, and I'll answer all of your questions that you have. And we'll look at everything. So pretty transparent. I like to be transparent. I think it's really important, especially for a long-term relationship. I'm not going to sell you something and then dump you. I want you to know that I'm going to be there for the life of that contract, if it's the next 30, 40 years, and that's how long I'll be around. So anyways, would love to help you with that, answer your questions. So anyways, thanks again for watching, and we'll see you next time.